In today's video, I'm excited to introduce you to Lori Jasicki of Fairway Mortgage. In our last video, we talked about pre-approval as part of the process in getting prepared to look at homes. Today, we're going to expand on that and talk all things lending. I've worked with Lori numerous times over the past few years, and I'm very excited to talk with her today. Now, make sure that you watch until the end because we have something very excited to talk about at the end. So let's jump right in and ask her some questions about financing. So Lori, tell us, why is having a pre-approval so important?
Well, it's interesting, Laura, in the current crazy market we're in, it serves multiple purposes. First of all, it lets the buyer know what they're qualified at. And it's interesting because there's lots of times where the buyer is qualified for a lot higher than they even want to spend. So it gives them an idea of what their budget is and then where they're comfortable at, which is kind of the second piece of that. It also lets them know what programs they qualify for. There are a lot of different loan programs out there, and a pre-approval will help them figure out this is the direction we want to go. And that's what, as a lender, we do for them. On the seller side, we're in a crazy market. And in this market, it's the difference that can make in an offer. When that pre-approval, first of all, comes from a local trusted lender, it goes a long way with the selling agent to know that they can trust this is going to close. The other thing it does is obviously lets the sellers know you're serious and that you're ready to buy and that you have truly been pre-approved.
I'm sure that you know this from the lender side, but I just wanted to reiterate on the realtor side, we almost can't even submit offers until we have a pre-approval because it's so common now that sellers just aren't even going to look at one, especially if you're up against other offers. They're not even going to look at your offer until your pre-approval is submitted. So having this well in advance is always a smart idea.
Yep.
So Lori, when should a potential buyer reach out to you?
So, the simple answer is the sooner the better, right? Because there's a couple different factors that goes into that. So let's say you're thinking about buying a house, but you don't want to buy a house for 6 months or when school gets out or, not till summer, whatever the timing is. It's important that you get set up properly to be ready to buy a house. There are some borrowers we work with where we are going to help them up their credit score so they qualify for a better program or a different program, or just help someone repair something on their credit, which can take a month or two to accomplish. So anytime you're thinking about buying, reaching out as early as possible is best. The beauty of it is that if you've got excellent credit and we've pulled your credit report to do your pre-approval, we've done all our due diligence, we're not going to continue to keep pulling your credit report. The credit inquiry with a mortgage does have a small impact on credit, but it's a small impact, nothing like a credit card inquiry or an auto loan inquiry. So there's some difference there too.
So follow-up question to that. So I sometimes have buyers that don't want to do it too soon because they're afraid, like they hear that it expires, right? So, maybe the pre-approval is good for 90 days. Well, what happens at 90 days if you need to renew it? Is
Right.
that going to be another hit, or like, how does that work?
So how we operate is, I guess maybe it's a little bit in the land of trust, but part of what we do is that if I have a borrower that I've been working with and I know well, as long as they tell me there's been no material changes, I'm not going to re-pull their credit. Credit actually is good for 120 days, not 90. We put an expiration date on pre-approval letters just so that the selling agents and the seller side know they're fresh, right? You don't want a 120-day-old pre-approval coming in on an offer because they're like, has anything changed since here? So what we do is we put a 60-day expiration date on it. Credit's good for 120 days. And if you called me on 125 days and say, well, hey, we're making an offer, if I know you've got good credit, we've had no issue, I have no issue not pulling that new credit until you have your offer accepted. So it avoids that constant updating credit.
Awesome. Thanks for that.
Sure.
Okay, so next question. How does a borrower know which loan program is best for them?
So that's an interesting question, Laura, because, first of all, that's my job as a lender, right? I've been doing this 30 years. That is my job as a lender to help provide you your options. That's what we do. So what we look at is all the different programs out there. And, it's interesting that local banks and different places may have one or two options. We have multiple different investors. We have multiple different options to put people in, and we look at all loan programs available. the beauty of that is I basically shop for you, right? But it also then narrows it down to helping us decide, here's two options we could look at. Do you want to do no money down, or would you like to do the 3% down? Here's two different programs, but it's stuff that we do the homework on, but we have to have all the information to do that because it's income, it's credit, it's debt ratio, it's have you owned another home, what shows on the credit report. So, people want answers or a pre-approval just by talking to you. And, I can give you some idea, but it would never be a true pre-approval until we're able to run everything through, because we actually run a pre-approval through the automated underwriting system. So when I say you qualify for this loan program, I've already run it through their system to be sure you're qualified and pre-approved.
Well, and that's important as far as me writing an offer as well, because you actually have to specify what type of loan program it is, how much down payment, like there's so much specific information in the offer that if you're not pre-approved ahead of time, you have no possible way of knowing, or I don't know how to write that offer without them talking to you about what's available and kind of having an idea and a game plan well before we actually write that offer.
It's interesting, Laura, because I think of it a lot like if someone had a stack of resumes on their desk, right? And you're looking through those resumes and you're deciding, okay, which ones am I eliminating quickly? Which three come to the top for me, right? I imagine that's a lot like what realtors do as a listing agent when you look at offers that come in, right? So which ones am I going to eliminate right away? Well, if I have an offer that doesn't have a pre-approval, you're not even looking at it, right? Then if I have a strong pre-approval, or I have someone who's been fully underwritten, it starts rising those offers up because they're stronger. And that's critical in this market.
Yeah, definitely. So talking about the strength of your offer, do you have to have 20% down to buy a house, or, are there other ways around that?
So it really depends on your given individual situation. There are multiple no money down options. There's even a state first time buyer program, and I'm so used to calling it a first time buyer program, but they actually opened it up just to low income as well. And when we say low income, I mean, you can have a family of three and make, I think $110,000 to somewhere in that range for the income limit. So it's not like we're talking poverty level income, but there are state programs where you not only don't need a down payment, it can even cover your closing costs and prepaid. So you literally come to the table getting your earnest money back. And then there are programs that are no money down, 3% down, 3.5% down, 5% down, and they continue. Now that's going to vary a little bit by the type of property you're buying. Is it your primary residence? Are you a first-time buyer? What is your income? All of those things factor into which programs are going to work, which really comes back to making sure you're working with someone you really trust and knows the market to be able to guide you on which is going to be the best option for you.
Now, when you mentioned first-time home buyer, what qualifies as a first-time home buyer in a lot of these programs?
Good question, because a lot of people think, well, I've owned a home before, I don't qualify. If you have not owned a home in the last 3 years, you're a first-time buyer. If you are a first-time buyer, but let's say someone's going on the loan with you, your boyfriend, your mom, whoever that has owned a home, but you're a first-time buyer, you still qualify as a first-time buyer. Both borrowers do not have to be first-time buyers.
No.
Yeah.
Great.
Yeah, helpful information.
Yes, definitely. So as far as like the strength, when you're talking about resumes, it's funny because the strength of your offer sometimes is on how much down you have. So, if you have the money to put the 20% down, me as the realtor may recommend that we try to go that route, especially if that's going to win you an offer in a competitive market. But like, let's say you have the money, you don't want to put it all down. We can still work around that. We can always, because you can say on your offer that you're willing to put 20% down. Doesn't mean you have to. You have to be able to.
Right.
But
able
you can
is the key to that.
Yeah, you can change that amount to 5% down in the process, as long as you're still qualifying for what you said you are on the offer. You can say, I'm going to put 20% down and then change your mind to 5% down based on conversations with, Lori and us and however that goes, as long as you qualify for whatever you write in the offer. So just a little side note.
Exactly. And we often, so as a lender, we communicate that out to the borrower and to their buyer's agent, to you, Laura, as the agent representing them, to let them know that I'm going to do the pre-approval letter with 10% down or 20% down because you have it and you could put it down. I know you probably likely only want to put 5% down, or you want to use the no money down program. Those are all options. But as long as you have the money and you're able to put it down, we can certainly do that. And it makes your pre-approval letter stronger in your offer.
Definitely. So how long does it take to get pre-approved these days? I haven't gone through it in a while.
Sure. So slight variables. So there's several options. I am always happy to meet a person face to face, which many people don't have the time for these days. So we also do phone applications where I just take all the information off the phone. It probably takes 10, 15 minutes tops to do a phone application. And then the last option, certainly a lot of people exercise, is you can apply online. We have a secure portal where you can apply online, and then it will even trigger you to tell you, here's where you upload your W-2s and your pay stubs, et cetera. So a couple things to know for us. We work when you work, right? I always say I don't want to ever be the reason someone didn't get an accepted offer, not in this market, right? Or any market. So what we do is, first of all, we will answer our phone all the time. We're a team, there's 3 of us, so one of us is always available. So we're always available to answer the phone. But the online portal also allows you to apply at any time. We get notified immediately, and then we can jump in wherever we are and run that pre-approval. The other thing we do with that is we will determine what do we need for documentations to issue that pre-approval letter. I can verify a lot of income online through the Work Number portal and several other options that we have out there to verify information. So a lot of times I don't even need the income documents to issue a pre-approval letter because I can verify all of that. The variable really falls into if you're self-employed, I might need to take a peek at the tax returns. But otherwise, I mean, literally start to finish, we've done pre-approvals in an hour or two, when it's needed. If you're standing in an open house and this is the house you want, we'll jump on it.
I always recommend to my buyers to have their taxes in order, especially if it's like springtime. Like the earlier you can file, the better, because trying to scramble and finish taxes when you're trying to get pre-approved is never fun.
We have a few of those.
I might be guilty. I think I did that on a refinance. So
Yep. Understood.
Yeah. Okay, great. Okay, so we kind of talked about this, I think, but is there something else they can do online, or is it just, hey, put everything in on the app?
So for us, and it's really, on my website, but there's apply online. And when they apply online, it notifies me immediately that they're out there working on their application. As soon as the application's completed, it notifies us as well. And then it allows them to upload everything there. That is a secure portal we use for everything from the day you apply until we close on documents. That's the only place everything goes. It makes it very simple. It's where everything gets uploaded to. So it makes it very easy for a borrower to know what is outstanding, what do they need in the process to be able to upload it in a secure site.
Awesome. That's really convenient.
Yeah.
Okay. What do you think as a lender you can offer buyers to help them in getting their offer accepted?
So we have several tools for that. So, it's really important that you're first just working with a trusted local lender. It's hard and again, I think right back to the resume theory, right? You've got 3 resumes. This person has references, and people you're connected to, and you're thinking, oh, right. And then this person's from out of state. You never heard of a single person on it. It's kind of the same when you look at offers, right? Be the seller and think about what do I want to see to accept an offer, right? So, there's certainly things you can do and you work with your agent on about appraisal contingencies and inspection contingencies, and I'll let Laura go into all of that. But in our world, there's a couple of things we do. We can run the property through ahead of time as long as I have your file, meaning you have an application with me. I can run it through to see if we get an appraisal waiver. So not only do you know that you want to waive the appraisal, you also know the value came in okay, because we get an appraisal waiver. That means nobody's requiring an appraisal. So what you're buying it for, what you're offering, does show in the systems as being the value that the property is at. So that's the one way to do it. The other thing we do is we do full underwrites. So when a normal pre-approval, we verified income, we verified assets, we've run the credit, we've run it through automated underwriting, right? That's pretty much standard in the industry, I hope. But it should be standard in the industry. We don't issue a pre-approval usually with less than that, right? But then there's one step further. We can take that full file and send it up to underwriting. And an underwriter is literally a physical person. This is an automated system who's verifying all that information meets the guidelines and meets the criteria to be approved. So they run that full underwrite through on that file, They send us the approval, and now you have a fully underwritten pre-approval. And in the world of buying and selling, agents know what that means, right? You know that this person hasn't just applied, they've been through underwriting, which is really the next step in the process. But there's even one step further we do beyond that. And we let the agents know, obviously, when they're pre-approved through underwriting, it'll be very clear that this has been a full underwrite, they're well qualified, that's information we provide. Go one step further, and we have something called a cash guarantee. So what that does is it takes your offer and makes it competitive with cash offers. So most people who are financing, right, Laura, you're marking that offer subject to financing. And then the seller, having recently sold a property, I know what that's like. You're sitting there thinking, well, I hope the financing goes through. I hope they don't run into issues. I hope there's nothing they find, right? Well, first we've been through underwriting, but then we're doing a cash guarantee, which waives the financing contingency. That means that if something happens with the financing, you're not on the hook and the seller is still going to close. That happens because first option is we do a cash guarantee on it and the buyer closes as normal. That's our goal. That's everybody's goal, right?
Right.
The second option is something happens, life happens to people, right? They lose their job, they've gotten hurt, they can't work anymore. Something happened between the time they came in to be underwritten and the time their offer was supposed to close, right? So what happens in those cases is Fairway will either purchase the house, right? And our goal is not to own inventory, far from it. We will immediately have it relisted with the agent involved, but we will buy the house so that the agents and the seller are not out, right? We guaranteed the financing, so we're buying the house now. And that's us putting our approvals on the line as well, right? The second option is, let's say the seller says, you know what, I don't want you to buy the house because I want to put it back on the market. I think it's worth more, whatever the situation is. They can then get a $10,000 check from Fairway, and everybody goes back, the house is relisted. And obviously we continue to try to work with our buyers who struggled through some kind of a hardship to see when and if we can get them into a property down the road. That makes sense?
I mean, that really sounds like a win-win for the buyer and the seller. I mean, me probably as a seller, I'd take the 10 grand and relist it. That's my personal.
I think a lot of people would. I think it's interesting though that, what we were accomplishing with this is that there's 4 financed offers on a house and 1 cash deal. You're the seller and you're the listing agent. You're like, cash is king, right? Cash, there's guaranteed. We won't have an issue with closing. Nothing should come up that should stop us from closing if we verified funds. So everybody leans towards wanting to take a cash offer, and we get it, right? We get why. A lot of times those cash offers are lower though, because like, hey, we got cash, right? Cash is king. I can make a lower offer and you're probably going to accept it because I'm paying cash. Well, now you're financing technically, right? Your offer, but we're converting it to a cash contract basically because we're waiving the financing contingency. So when you do the to be determined, I said TBD earlier and didn't tell anybody what that means, but it's to be determined address, or you do the cash guarantee where you're fully underwritten, right? And you're just waiting for your house, or you're fully underwritten with the cash guarantee. Either one of those, we then have the ability to close super fast because we literally need to order appraisal and title, which we can get in days. So
we talked about that the other day, and I thought that was actually huge because, a lot of these sellers are looking, the cash offers might be a 2-week closing or a 3-week closing, and you can't compete with that when you're financing. A lot of the times with a lot of lenders, they want 30 days, 45 days. So this is huge. I mean, if you can do it in even 3 weeks, like that could be a huge benefit to the seller. So some sellers don't need to move that fast or don't want to, but it's a good thing to have in your pocket. Where if they're like, yeah, the house is empty, like maybe you're buying one where they already moved out. They're like, yeah, we want to close in 2 weeks. That'd be great.
Well,
so
there's some strategies.
Deal.
Yeah, there's some strategies around that too, Laura, because, a couple of things. Fairway is built, and my branch is built for speed. We just are. Speed to respond is one of our core fundamentals of our company. So we are built to be able to do things quickly. Closing in 2 weeks on a regular finance deal is not unheard of. We do it often, right? We do what we need to make sure the borrower gets their offer accepted. But, when you look at being able to close quickly, it takes the pressure off the seller because they're waiting to see, Is there going to be a problem? Are they going to get loan commitment? Are we going to be closed on time? What's going on, right? So when you say I'll close this in 2 weeks, first, it gives them the confidence. Second, if they want to close in 2 weeks and maybe you let them stay back in the house for another 2 weeks to move out, it could be a negotiating option that adds to their offer. Like, okay, now I know we're closed and we have our money. We can still wait till the end of the month to move out because we worked out in the offer, the arrangement to do that. So there's lots of opportunities there to use that to the buyer's benefit to make a stronger offer.
Awesome. Okay, so I love this is one of my favorite questions. Does it make more sense to wait for interest rates to come down to buy or not?
So obviously that's like, I feel like the question of the year, isn't it, Laura?
Yeah, definitely.
I'm just going to wait. And I'm always thinking, what are you waiting for? Right? I laugh because in comparison, years ago, I sold cars and I had a customer come into me one day and they love the van. They want to buy it. They're all set. And she said, but we're going to wait for a fire sale. And I'm like, are we expecting a fire? Right? It's kind of like, what are you waiting for? So a few things to know about the mortgage world and kind of how our economy works. There's a couple of things happening right now. And part of it is that the longer you wait, you are losing out on equity because your house is gaining value. People forget that their house is an investment. Your rent is gaining zero value, right? Your landlord is gaining value. You are not gaining any value, right? So when you jump in and purchase a house, every month your house is gaining equity, right? And I think the national average over the last, I forget how many years, 15 years is 4.3% or something a year in equity, right? So if you do that math, so let's say you're even paying a point or a point and a half higher than where the rate might be a year from now. And that's a might be, right? We don't know for sure. But what's happening in that time is you are gaining equity in that, okay? So you've got one guy over here who decided to rent for a year. You've got a guy over here who decided to buy today at a point higher rate, or maybe even a point and a half higher rate, but he's gaining equity in his property. Maybe he pays that rate for a year. And by the end of that first year, he's gained 4% equity, right, on his property. And he could then refinance into whatever the market rate is if and when the rates come down. All indications are that rates should come down, but they follow inflation. And, we're relying on our government to help I didn't even laugh when I said that. We're relying on our government to help reduce inflation, to keep the market moving in the right direction. They are working diligently on it. It is moving, but it's moving slowly. And in the meantime, you're missing out on inventory. And here's what's going to happen. All the people who don't follow the logic that we're sharing right now with this are sitting on the sidelines, right? Sitting in mom and dad's basement, sitting wherever they're sitting, waiting to buy. And what's going to happen is all of a sudden, if rates do tick down and they start thinking, oh, I might come back out in the market, all these people are going to come back on the market competing for the same houses because inventory isn't going to magically go up.
That is so true. And I talk about that a lot with inventory because people are like, well, prices are going to start coming down because interest rates are high. The problem is we don't have any houses to sell. So the prices are going to stay the same. I mean, okay, not no houses to sell, but so much less inventory than just a few years ago.
Right.
So really, if you look in depth at the situation, also is over the past, let's say 20 years that I've owned properties, almost every loan I've ever had was 5 to 6%. Like the 2 to 3% that we saw briefly, it will probably never happen again.
It will never happen again. And there's statistics to prove it. It's because the federal government was basically artificially keeping mortgage rates low. And when they stopped doing that, that's part of what caused the lid came off, caused rates to go up, right? So people who think they're going to see 3% rates again, we don't even know for sure we're able to see the 4s again. Realistically, if you look at mortgage rates through history, and I don't want to give out my age, but my first mortgage was 14.75%, right? And at the time, it's just what the rates were, right? You determine how much you can afford. Did I lose money buying that house? No, I definitely came out ahead. A house is always an investment that's gaining equity, right? The rates can ebb and flow. Did I refinance that property? You bet I did. Right?
Yeah. And people have to remember too, that as inflation keeps going up or even holds steady at the high rate of inflation we have right now, home prices are following inflation as well. Like everything follows inflation. So to lose money on an investment, if you plan to be there even 2 to 5 years, I think is so unlikely that I would just encourage everybody to jump in now before rates go down and people start fighting tooth and nail, because then you're just going to have to pay, you have to bid over price to get the property. So you're going to have a higher purchase price, but maybe a little bit lower rate. So it's really a give and take. Like there is no better time to buy real estate than yesterday, right?
And there's, well, it's kind of like, I always think of it this way. By the time you know of a great stock, right? It's too late to buy it, right?
Yeah, everybody else knows too.
So it's kind of, it's a little bit like that because you're jumping into the market. You are jumping into kind of an investment, right? It's what it is. And does it ebb and flow a little bit? Sure, it does. But over the 30-year spans of housing, there have been, I think, 2 years where houses did not appreciate. And one of them was 2008, which will never happen again because of the circumstances surrounding that. That was caused by the mortgage industry itself, not the economy.
That's another rabbit hole.
Right? Right. We're not going there today.
Yeah, no. Okay, so I feel like I know the answer to this question, but what makes you and Fairway Mortgage different than everybody else, or even like the big box? When I say that, I'm talking like the BMO Harris, the Wells Fargo, the Citibanks, the big ones. That's my personal question on that one. But in general, what's your opinion on why you guys are different?
Well, okay. So first of all, we are built from the ground up on customer service and speed to respond. That is what we're built on. We don't do banking. We don't do deposits. We don't do credit cards. We only do mortgages. We are a mortgage bank. We are nationwide. When you look at some of the big box banks that are out there, we last year were number 10 in the country for purchase volume. Meaning that when you look at every lender, every bank, the Wells Fargo, the Bank of America, the Chase, all of them, we were number 10 in the country.
Oh.
We were number 4 previously, but as the markets change, so things change. But the real point I'm getting at is that we are a huge company nationwide. We closed what, 72 billion last year. So to give you some perspective, we've got a lot of weight behind us. We have a company that carries a lot of weight, has a really good reputation in the industry. So that's number one. Number two is that we have local service, right? I am in this neighborhood. I am here. We have offices in West Bend, New Berlin, and Waterford, Wisconsin. So that's where my branches are. And we are here to serve, right? You can't call a Wells Fargo or Bank of America on Sunday evening at 7 o'clock when you need your pre-approval updated, or you need to get a pre-approval, right? Those things don't happen. We are not a traditional bank in any sense of the word. The other option is that we have all of the mortgage options out there. So we sell direct to Fannie and Freddie and Ginnie Mae, which is VA and USDA. So we get the best pricing because we're large enough, we can sell direct to them. We also have options of all kinds of other opportunities between brokering loans and other investors. So we have a lot of options out there. When I run a pre-approval, I'm looking through all of those, right? So, you know, on any given day, I'm looking at possibly 27 different investors, and of those 27 different investors, they all have, you know, hundreds of programs, right? So I'm looking through all of that stuff when we're working with a customer. The other thing that's great about it is because we are local, I am your advocate, right? I am here to help you as a buyer and help you as an agent. I will be there for you. I will answer my phone. And we will, when there are deadlines, we honor those deadlines. That is the drop dead for everything. There's loan commitment contingency dates, appraisal contingency dates, and offers, and obviously the closing date, the most important date. All of those dates are what we live by, right? There's layers of that other companies and other banks out there just don't understand the importance of. So we're here for you. We close quickly. We have in-branch, in-house underwriting and processing. So there's so many elements to that that make such a difference. I personally have almost 30 years experience in this industry. So I've done it a long time. I've seen a lot. I've worked for some of those big banks, and I'm here to tell you, there is a reason that they will wheel me out of here one day when it's my time, because Fairway really does make the difference. It's night and day.
So a couple points there that I heard that I wanted to just hit on and agree with are the availability. Obviously, if you're working with a bank that follows bankers' hours, those people are not available to help on the weekend. And that could mean the difference of saving a deal and having it go through on time or not, especially if we're coming up, let's say, on something like the financing contingency date. And they're not paying attention and, it expires on a Saturday and they don't have it to me on Friday. Like there's nothing else I can do as a realtor other than extend the contingency, which sellers don't have to agree to. So like that could mean the difference between getting a house or not. So that is super, super important. I love working with local lenders that are available. Not that we're calling you, Saturday at 8 a.m., but we might.
Hey, it happens.
And then the other thing, which I'm going to talk about kind of high level, because I don't know that I always understand all of this, but I know you do, is that like when you're working with a big bank, they have certain overlays. I hear the word overlays a lot in the mortgage industry. That basically means they might or might not be able to do certain things, right? So like they might not be able to get you that same program. So a bank might tell you that you're not qualified for this, and they might come to you and you're like, oh yeah, we can do that.
That's a really good point, Laura. Yeah. So what happens is it's not even just overlays. So if you kind of separate the two, overlays are, so I'm a big bank and I say, here's the guidelines from Fannie Mae. Now we really don't agree with this, this, and this, and we put our overlays on top of it, which may mean you don't qualify, right? Or may mean you need to do extra things to qualify. Fairway does not have overlays. We sell direct to Fannie, Freddie, as I said, so we use their guidelines. There's no overlay on top of that. I didn't mention, but we also service our own loans. So when a borrower makes a payment, they're making it to Fairway. It's not being sold, it's not going elsewhere. But when you talk about programs, the really important thing to know is everyone goes, I'm going to go to my credit union. It's where mom and dad went, whatever. I get it, right? That's where you should bank at, absolutely. But when you're looking at your mortgage, they usually have one option or maybe two. Maybe they don't use any of the state or federal bond programs that allow for a borrower to have no money down, or use the first time buyer programs, or use the limited income options that are out there. There are so many programs and options. And a lot of people walk into their bank and come back and say, yeah, I didn't get approved. I can't do a loan. I think it's imperative. And even if you are approved, get a second opinion. Get a second opinion. No one would go for surgery for something major without maybe getting a second opinion, right? You're buying your biggest investment. The largest thing you will ever buy in your life is your house, right? Right. Get a second opinion. And I will tell you, I'm always happy to talk through someone. And if what they have is the best option in the whole world and I can't do anything better, I'm going to tell you. But I also am very competitive. And I will tell you if I can do better for you or find a better option, I would let you know that too. Those conversations can even just start with, tell me what they offered you, tell me where you're at. I don't necessarily have to take a full application date, that first minute. I'm happy just to have a conversation about it. Some people don't understand when you talk about, competitive competition, et cetera. I always say there's no free lunch. That's the reality that, the fees get hidden, the costs get hidden, right? Suddenly they don't understand that they're paying massive amounts of fees to get this incredible rate they've got advertised, where maybe they don't have to pay those fees and maybe refinancing down the road is a better option. But a lot of times it's the fine print that will get people. I'm even happy just to walk them through that. Send me what they sent you. Let me walk you through it to make sure you understand it. And if it's still what you want to do, absolutely. God bless you. Absolutely. If it's not, let me see if we can do something better for you.
Now, I've had, especially first-time home buyers that don't quite understand how this all works. They're concerned about getting a second opinion because they think it's going to hurt their credit, or like, how does that impact? Does it impact their credit at all? How does that work?
So we tell everybody it's 30 days. I believe if I read the FICO guidelines through the credit bureaus, that it's actually more like 45 days, but there is a 30-day window from the time you have your first mortgage inquiry. Okay, this doesn't apply to credit cards and auto loans, but if you get a mortgage inquiry on your credit, you have 30 days. If someone else pulls your credit, that's a mortgage inquiry. It's not going to have any impact on your credit because it was really designed to allow you to shop for a mortgage. Do I recommend you go to 40 places? No. One or two is sufficient because, if you've got some varying opinions, but I think it's important to understand that there are lenders out there that will tell people, don't let anyone else pull your credit. Well, that might be true for credit cards. I'm not going to tell you to go out and apply for cards, right? There's rules there that we'll get into in other videos. But the bottom line is you absolutely can let another mortgage company pull your credit and see what they can offer you without having any impact on your scores.
That's awesome. Now, what if they're outside of that 45 days? It's still minimal impact,
So
right?
a mortgage inquiry, you're talking about a couple of points. And the only time this really makes a difference in our world, really, if you've got a 800 score or a 790 score and you hit with a couple of points, it's going to have no impact at all. 740 and over is golden in our world, right? It's probably the best you're going to get in pricing. It's the best things are going to look like. When people have low scores, I'll have those conversations with them. It's important people with low scores to let me get involved early because I can help them. We offer a service of, it's called Credit Tool, that we can help them improve their credit scores and get them qualified. There's no charge to them for that. So that's something we do offer. So depending on where they're at in that process, we can certainly jump in and help on either end, but the impact is minimal compared to what it could save you over a lifetime.
Awesome. Thank you so much for that. That is one of the biggest concerns I hear new buyers, like, I don't want to pull it too early. I don't want to pull it too many times. So that is very helpful. Thank you. Okay, so as we wrap this video up, I want to thank you for your time. This has been great and informative. Yes. And everybody on this video already knows about what I am offering. When you go through my video series and you complete all the videos on this buyer informational series, you are going to get a $500 closing cost credit at closing of your property when you use our team. Now, you are offering borrowers something as well. Tell me a little bit about that.
I am, not to be a copycat, Laura, but I will tell you, I think anytime borrowers will take the time to educate themselves, and that's really what we're here for. It's what I do every day on the phone with borrowers, is educate them about the process, how it all works. So anybody who's willing to do the same thing, I go through my video series, we'll end up with an additional $500 seller or credit towards their closing costs and prepaids to be applied at closing. So that would total $1,000 between the two of us. You use Laura as your realtor, me as your lender, and you're going to get $1,000 off your closing costs, which is phenomenal. Just reduce what you have to bring to closing.
Right. Awesome. Well, thank you so much for offering that to everybody. And what's going to happen is either there's going to be a link at the bottom of this for you guys to go in and put your email in and get added onto the video series so that you can qualify.
Yep.
Or I'll let you know exactly how this is all going to work, but we're going to get you set up with approximately how many more videos for the lender series?
We're going to do 5 more.
Okay, so 5 more videos with Lori. You'll get to know her super well. You'll be so educated. It'll be silly. And then you will, when you go to close with us as a team, you're going to get that credit. And so I'm really excited that you have taken this time to spend with us and learn on this journey. And if you have any questions, either for myself or Lori, feel free to leave a comment. Feel free to email us. You should, by this point, have all of our contact information and know where to find us. And we are happy to help. So thank you so much for watching, and we look forward to the next series.
Great. Thank you, Laura. It's been a pleasure.